in fact, take it across to Nitin Raheja. He's joining us. He's from Julius Baer, India. Nitin, hi. Give us your take with regard to what you made of the auto sector numbers and anything that really stood out for you in terms of the numbers versus what you were expecting.
No, I think the auto sector numbers have been pretty strong. And in a sense, for all the weakness that the sector has shown in the last quarter or so, in fact, if you look at a lot of auto companies on a YTD basis, they are actually trading in the negative in terms of the return. But for all the weakness, the numbers have been quite resilient. I think the fears with regard to high oil prices and inflation impact have so far not been visible. And I think valuations of the sector are yet pretty well priced, pretty attractive from a longer term investment perspective. So we do like the auto sector. We like companies who are playing the premiumization theme. So by that logic, companies who are in the SUV segment of the market. We like companies who have an EV play out there and are strong in that part of the business. I think, right now, the commercial vehicle sector seems to be doing quite well. So I think these are the 3 or 4 broad areas that we like.
Those are some of the names within the auto pack that are looking good. Just want to address a news and the development on ITC. We've seen a new launch coming in from ITC. They've launched the coconut cola under their Be Natural brand. Remember, their Be Natural brand, it caters to packaged coconut water. And now they've launched a coconut flavor cola over there. The new coconut cola contains no added sugar, no caffeine, provides only 9 kilocalories per serving. And coconut cola is available in a 250 ml can, priced at 60 rupees, more or less in line with where the other cola variants are priced. Coconut cola is part of ITC's broader innovation in their beverages portfolio, and the beverages portfolio includes their Sunfeast breakfast smoothie and milkshakes. So new foray by ITC into the cola segment, and lots of new forays have been happening by consumption companies, because you've seen some developments coming in for Varun Beverages also, wherein, at least not in India so far, but in their African business, they have forayed into the alcobev segment. So that's a big foray for them. They had announced this roughly 6 months ago. And now you've got this foray coming in from ITC. Kunal, on the charts, these consumer staples names, the bigger ones, especially the ones that have beverages exposure, like you have your Dabur for their real juices, now ITC and Varun Beverages. Amid the beverages space, what's looking better on the charts?
So I think Varun Beverages, out of the 3 names, is the one which is looking better. ITC and Dabur, I think both of these stocks are still trying to, I would say, struggle in terms of trying to find its momentum back again. These stocks are still below their long-term averages. It's just that I think the last 1 or 2 days, you've seen the FMCG stocks overall rallying up, and that's why you saw names like Dabur trying to just about perk up a little higher from their previous swing lows. But on the medium to long-term charts, ITC, Dabur, both of these stocks are still showing signs of struggle or in terms of downtrend. But Varun Beverages, on the other hand, this recent move from 400 levels to 500 plus mark where the stock is trading right now, I think is very, very strong. It's been led by stronger set of volumes. The momentum has come back again into Varun Beverages. So this is one stock which I'll be particularly bullish on.
Okay, Varun Beverages. What's your take on this one, Nitin?
We don't really comment on single stocks.
Okay, so on the entire, maybe the consumption theme, and within that consumption theme, maybe in the drink segment, beverages segment. Well,
we are positive on the consumption segment, but what has happened is there has been a commoditization as far as the whole segment has been concerned, and that has impacted the intensity of competition had gone up, and that was impacting companies in the segment. The other element was that we had a recovery where the bottom K was yet struggling post-COVID. So again, there, what we had seen was that premiumization of consumption of people who are coming up with products which are, so either you have a play which is you play it seasonally, and you would find a lot of these summer plays, so beverages would play that out, and I think this is going to be a good year considering the kind of summer that we had for the beverage pack and so on and so forth. Or you sort of play it through someone who has a differentiated offering. or a premium offering. I think those are the two key areas which are doing well as far as this is concerned, and that's pretty much been the theme across when we've seen some of the companies who have announced the results.
Right, so that's on staples and particularly beverages. But Nitin, what is your take when it comes to consumer durables? Now, this year, after two very muted summers, has been good for some of the AC makers, AC component makers. So, consumer durables, so far at least, from what the understanding on ground is, that Q1 might be pretty decent for them. But what about the rest of the quarters? What about FY27 overall? How do you think the consumer durables will be? And do you believe that the sluggishness that has been seen in the recent past can be made up, if at all?
We are positive on that whole pack. We think that post the GST cut, the sentiment had gone up and things were looking good. And then you had this whole inflation and supply chain related issues, especially with regard to China coming into play with a lot of companies in the air conditioning segment and so on and so forth. But I think the summer being what it has, I think they will have a very, very strong quarter. Especially the air conditioning companies and the whole peripheral ecosystem within it, the suppliers within that ecosystem and so on and so forth. And, as we go 3 months down the road, we will again be entering festival season. So I would think that this year as a whole should be better for the consumer durable manufacturers.
Okay, sounding optimistic on that note. Let's refocus, and it's time now for...
Then let me come to you on the IT sector. I mean, 5%... We've gotten used to the volatility in IT, but 5% is a bit much, even given the fact that we've gotten used to this. But where do you sit in terms of the argument?
Look, I think there is too much of confusion in terms of the path ahead for the IT companies. We are not clear in terms of the impact of AI. AI will have an impact, right? But what's the extent of the impact that AI will have is something which is yet not very, very clear. Okay, so we are yet in very early days. In fact, if you really look at the currently the whole AI trade globally, it's based on a capex-oriented trade. The whole application of AI across industries and their what would be the impact across, we don't know. Now, we know for sure that AI will have a revenue deflation impact. But what is the revenue deflation impact? Difficult to say. Now, in such a scenario where there is uncertainty as far as future is concerned, what is the P multiple that you're ready to pay? Honestly, I don't have an answer to that. But if I go back and look up in history and in the past, for example, when we entered into this period, IT was trading somewhere around 20-21 times earnings, the top IT companies. As we talk today, they're trading around 15 times and 16 times earnings, with earnings having growth having contracted to in the low single digits. But if I go back and look in history in times such as when the technology bubble sort of burst in 2001, or in 2008-9 when you had the Lehman crisis, when there was uncertainty because a large component of IT spending was from financial services in the US. IT had even traded at multiples closer to 11 and 12. So if one were to sort of extrapolate from there, could they further derate? Answer is possible. Surely, looking at it currently at a 15 multiple with the kind of businesses, the kind of cash flows, the dividends that they are putting out, makes them very attractive from a pure valuation perspective. But the question is on growth, and what will be the extent of the deflation in revenues. So I would probably be underweight on the sector, because right now I don't have a crystal ball answer to seeing what could be the growth prospects for the sector.
Fair enough, in fact, and that's a fair assessment of the sector as well. And in fact, the recent reports that we've been reading about the impact of AI, they seem to suggest that AI is actually doing more good than harm in terms of employment numbers. Very recently in the US, it's an interesting news that has come up that Ford has rehired the 350 engineers it laid off because they realized that AI could not do what their human engineers were doing. So, I mean, it's really interesting the way that we've been seeing this kind of news develop all over the world. But Kunal, that makes me think a sector that is more or less safe, if we could call it that, from AI is real estate. There is not much AI can do in terms of human labor. How are you looking at this sector on the charts? Any names that look good?
Yeah, there are so many stocks which are now looking attractive for the real estate names. It started off initially with Godrej Properties and Oberoi Realty being the best names for the performing stocks from the pack. But now you have so many options. Prestige, for example, is looking attractive. Macrotech Developers or Lodha is the one which is looking attractive. DLF, a stock which has been one of the stronger stocks from the other heavy-weighted stocks in the real estate pack, but apparently an underperformer in this last 3 months of rally for the real estate stocks comparatively. That stock is now started to look attractive above 640, 650 mark where it's trading right now. So options have started to open up quite strongly. You're looking at the Nifty Realty Index also. I think it's gained almost 250 odd points, 200 points plus from its previous major lows in the month of March. 660, 650 was the Realty Index, and now we are almost at 870, 875 on the Nifty Realty. So price-wise, trend-wise, I think it's been an exceptional sector and still continues to look strong. From the current levels, if you ask me specifically names, I would look at Oberoi Realty, Godrej Properties, and DLF at the current juncture. These are three good names which I would believe could continue to move up higher from the current levels.
You like realty too, Nitin? How do you look at the real estate pack?
I think the real estate pack, when you look at it, one of the things clearly going for it is the fact that the sector has had a correction in terms of valuations over the last 1 year. Also, I think the other element in real estate that one has to, when you anecdotally talk to people on ground, is this, that you are seeing fresh developments slowing down. Clearly, a lot of what you're seeing today is the older projects that were announced in the pipeline, which have come in, and so on and so forth. Also, the fresh supply that is expected to come. We are in the third or fourth year of the real estate cycle post-COVID. So you're going to see an incremental amount of fresh supply. So price increases are not going to happen. And I would play this selectively based on individual developers and projects, for the simple reason this is going to be more of a bottom-up play rather than the whole macro play that happened 3 or 4 years ago is behind us. Now it's really going to be individual companies depending on what their product basket is, and you need to play it through that.
That's your view on real estate. Nitin, how are you looking at defense? Because, we've been talking about sectors where we've seen swings and we've seen cycles, and defense has also been one of them. Especially on the shipbuilding front, like my colleague Prakash was just highlighting, we've got positive news flow on Cochin Shipyard. Of course, that's source-based, so we're waiting for a confirmation on that. But other than that, how are you looking at the entire shipbuilding segment? And within defense, would that be your preferred segment, or are there other themes that you're exploring at the moment?
So, there is clearly a tailwind as far as defense as a sector is concerned, from the whole, government spending on defense, plus the whole incentive to make in India, and also possibly export from India certain systems and subsystems and so on and so forth. So clearly that is there. However, one needs to bear in mind the kind of valuations that these companies are today trading on are actually discounting a healthy growth prospect for a couple of years, because they're all trading at, most of them are trading at say 40 times multiple and so on and so forth. Now, these are typically businesses, if you look at just from a pure business perspective, they don't have the return on capital to justify these kind of multiples. They're very working capital intensive, depending on government payouts for their working capital cycles. So again, out here, the way I look at it is, if I were to play defense, I would play it through a couple of the larger players out there who are actually developing a whole ecosystem under them, because the ecosystem players are trading at substantial valuations. While the larger players are not cheap, but they're relatively cheaper. So I would play it through some of the larger players, the government, 3 or 4 large government companies. As far as the shipbuilding sector is concerned, I think it's in for a multiple year cycle, and one could surely have a exposure there.
Okay. Nitin?
But Nitin, want to come to you and speak to you about the development that we're seeing on the crude front. For a couple of days now, crude has positively stayed below $75 a barrel, and it's not moving too much. And in fact, all the cues that we're getting globally as well are all indicating that talks have been positive between the related parties. And so far, there is no spike up or pressure on crude. If you were to play this entire fall in crude theme, would you be doing that via OMCs? Would you be looking at aviation? Would it be tire, rubber stocks? How would you think? How do you think would be the best way to play this theme?
My preference would be for structural long-term stories who could benefit. So aviation is one, rubber is the other, as such. As far as OMC is concerned, it's a very short tactical trade and normally gets discounted. By the time you see crude prices coming off, the stock prices of those would have already rallied, and so on and so forth. So I would rather place companies such as these, aviation and rubber and so on and so forth, or even chemicals in some of cases, who will really have a long-term benefit going there.
Spoken about banks, so let's shift focus and speak about some other sectors that have been doing well. Nitin, talk to us about what else is looking good in the market right now. We've seen some good moves coming in metal. In fact, on the days where we've seen some weakness in the market and some expiry pressure play out, metals have been holding on well. Are you positive on this space?
Yes, we are, although we do believe that one leg of the rally has happened, and we've seen some consolidation in the last few months. But longer term, we do believe that this is a space that will continue to do well in India.
You're looking at banks, Kunal, especially some of the ones which have come out with numbers, the PSU pack, some of them, Can Bank, Bob. Bob, I know you're negative. What about Canara Bank?
Yeah, I think for most of the PSU banking names, I would not be very bullish on. It's not that I'm very bearish on these stocks. It's the construct of the entire bank Nifty, where we were in the last 1 year, vis-a-vis, I think, start of this calendar year. So I think in that comparison, the private sector banking stocks stand out quite strongly and starkly, I think, with respect to comparison between the PSU banking names. And, remember, I think PSU banking stocks had a fantastic uptrend post, I think, July, August 2025, where at one point of time, many of the PSU banking names were up 20-25% in a very short span of time. So I think now it's more like a time-wise consolidation for many of these PSU banking names. And that's why you see many of the stocks, the likes of Canara Bank, PNB, Bank of India, Baroda, etc. These stocks are just about trying to trade into a broader range for themselves over the last 3-4 months. And this, in comparison with the private sector banking stocks, makes the trade a little bit more attractive for the private sector banking names to continue to move up higher till the time these PSU banking stocks consolidate. And one more point, historically we've seen that whenever the consolidation happens for PSU banking sector, there have been at least 2 or 3 consecutive months where the PSU banking index remains to be an underperforming index. Only post that is where we expect revival to happen. So even if we can try and compare with that, I would expect that maybe this part of this entire month, you might probably expect PSU banking stocks and the index at large to be more of a consolidative trend.
Okay, that's on the PSU banking space. Shifting focus, we've been speaking about